how does anybody know how much money is actually in there, who sent what, when are these like reconciliations happening? And that's why that like 5 or 10% number like starts to make sense to me, where it's just like these computers don't sync up because they're running on like 80-year-old code or whatever, like, and through this like bureaucracy meat grinder, and like how much money is there at any given time? Nobody knows.
Welcome back to Bitcoin.com's Token Narratives, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. My name is Graham Stone, Bitcoin.com's high priest of the Temple of Hopium. Joining us this week are news and research gigabrain, Mr. David Sensel. Welcome, sir. And we also have Bitcoin.com chief scientist, Andrei Terentiev. How you doing?
Doing well. How are you?
Pretty good, thanks. Nice sunny day here in this undisclosed location. All right, so let's get into it. Macro is in charge. I'm going to read the first couple paragraphs of David's weekly newsletter, which, by the way, if you're not subscribing to it, it's quality content. You can find it on Bitcoin.com's homepage. I don't know, anywhere. Sign up to the newsletter. It's delivered to your inbox Friday evenings, usually, depending on David's workload. So I'm going to read the first letter here. The first paragraph. The biggest stories of the week affecting crypto had nothing to do with crypto. Macroeconomics and geopolitics drove not just the crypto markets, but all markets. That seems about right, doesn't it? So going on, the Federal Reserve kept the federal funds rate steady, citing persistent inflation concerns. Now, this is some news that just came out, yesterday? That was the latest meeting?
That's right, the Fed's meeting.
So they did not raise or lower rates. I don't think anyone expected anything else, did they?
Yeah, that was within expectations.
Right. Yep. Now, you go on in your newsletter. More importantly, the Federal Reserve adjusted its balance sheet strategy by cutting the monthly Treasury redemption cap from $25 billion to $5 billion, meaning it will hold on to more assets and slow the pace at which liquidity is drawn from the financial system. What the hell does that mean?
So basically, they have been doing quantitative tightening for, God, how long? I want to say more than 6 months. Basically, they've been shrinking the size of their balance sheet. And so this means that, for example, they hold a bunch of treasuries, and as those treasuries mature, they don't replace them, as in they don't go out and buy new ones. And this effectively makes the size of their balance sheet smaller. And so they are now slowing down the rate at which they are not redeeming these from 25 billion to 5 billion. And this effectively means that their balance sheet will not shrink at the pace it was before. And it basically means that there's more liquidity. It helps keep more liquidity in the system.
An extra 20 billion of monthly liquidity.
Yeah.
Isn't that like a drop in the ocean of financial markets?
A little bit, but so if you compound this over however long they've been doing it, I heard on some podcast this week that the Fed is getting close to, there's some not fancy acronym, but it's like safest, what is it? SLO, safest, lowest SLR. lowest reserves for the banking system, right? They're reaching that area where the banking system's minimum reserves, it's starting to get to the minimum reserves. And the last time this happened, I think in 2018, it caused a mini financial crisis. And ever since then, they've been making sure that the banking system has enough liquidity, enough reserves, that it doesn't have any problems when it reaches this point. Anyways, the simple way to think about this though is that they've been trying to run down or reduce their balance sheet for quite a while. I want to say it's been more than a year, and this is kind of signaling that strategy might be coming to a conclusion. And it doesn't mean that they're going to start expanding the balance sheet, which is often called quantitative easing. But it does make the likelihood that they will start expanding in the future higher, right? And as I point out in my newsletter, you have folks like Arthur Hayes, who thinks that later this year, Q3, I think, Q3, Q4, they're going to start printing more money again, which is, basically quantitative easing. They're going to expand the balance sheet. You have other people also like Michael Howell of Cross Border Capital, who I've talked about here before. He also thinks that he actually has an even stronger opinion that it must happen, right? The Fed must increase its balance sheet, or there will be some kind of pain, like financial crisis kind of situation. There needs to be more liquidity in the system, and it's getting to the point where it's too low. So this signal, this action by the Fed is, I think, a reasonably good signal that maybe they agree with some of these macro analysts.
I mean, basically, it's kind of just like the tides are shifting, right? So if we go back to like COVID as the original catalyst of a lot of the markets, you have huge easing, huge money printing during that period, and then kind of the what do you call it, hangover from that during the Biden administration. Interest rates go up, yada yada, and now we're finally seeing like some reversal in this, which, if things move slowly, then you have a potentially good 1 to 2 year macro picture. Would you agree with that?
Now, is this why we saw a little bump in the price of Bitcoin and a few other crypto assets yesterday?
I mean, it's an interesting situation, right? Because if you read news about the kind of the statements from the Fed, right, Powell's statements after the announcement, the news was not positive, right? Like, it was kind of it was cautious. Like, we were worried about inflation. Powell specifically mentioned tariffs, right? Trump's tariffs as a potential source of inflation. So all the economic news was kind of negative. And then, the market's reaction was positive. Not just crypto, like all markets were
all risk
were up.
assets.
All risk assets were up.
Yeah,
and
but also non-risk assets. It seems gold just hit an all-time high again, which
I would say that's a separate, completely separate thing.
Completely separate thing
than this. Yeah, definitely.
Okay, so the rise in gold is separate because that's just a like an uncertainty play. There's a lot of uncertainty in the markets right now, and gold is seen as the thing you go to when there's uncertainty. Is there anything else at play there?
Kind of, right? Like, you have the uncertainty you have for the past. I mean, since America started seizing assets after the start of the Ukraine-Russia war, you had many nations begin to take positions, more like bigger positions in gold, right? They wanted to kind of hedge against U.S. I don't know, bullying or control. So that's been a major thing. Bad play by the U.S. by the way. I think was a terrible mistake. But yeah, so I would say those are probably the two driving factors for gold: the uncertainty, and then the U.S.'s stupid move. The Europeans also did a little bit of that, seizing assets as well, but nothing to the degree that the U.S. did.
Okay, so gold's a separate issue. The markets seem to have interpreted the Fed's move to slow down quantitative tightening as a bullish signal. What else have we got on our plate here?
Well, Graham, you've heard the phrase that in finance you have good news is bad news and bad news is good news, right? At least as it concerns central bankers, right? When the idea behind this is when you hear lots of good news, then central bankers might want to kind of put the brakes on it, right? So it doesn't overheat. And because financial markets are forward looking, they take that good news and they predict that central bankers will then kind of create headwinds, right? By like maybe raising rates or this kind of thing. And so then
they start pricing in that.
They start pricing
outcome.
that in, and so then you'll get like positive headlines, right? Oh, the economy's doing great, and then the stock market will go down because of that, right? Or you get like in this case, the Fed is kind of worried about some things, and then that means that in the future, it increases the chances that they will step in and try to kind of juice the markets, right? By either lowering interest rates or just quantitative easing or something like that, and then the markets will price that in. So it could be a little of that. I still think though that I think Jim Bianco said it this week. He said the markets are too uncertain to really glean anything from the movements from one day to the next, right? So yeah, it went up on this news initially, but who knows where it'll be in a week, and who knows what Trump will say in a week, and who knows where tensions in the Middle East will be in a week. So don't try to look too much into these kinds of movements right now because it's just too volatile and uncertain.
Do you know if you just were having a little bit of like a flat period now after that? In BTC it was a 30% correction. I don't know what the S&P was. Maybe what, 15%, 10%, less?
10% right now, I think.
Yeah, 10%, and now we're kind of treading water. I guess how do you interpret that compared to you just mentioned the day-to-day move, but that's maybe like a couple weeks, I guess, trend.
So Arthur Hayes had a tweet yesterday right after the Fed's announcement and comments, and he said in the tweet, I think he said something like, I think that we're probably 77,000 was probably the bottom for Bitcoin, or is highly likely, but he still thinks that the S&P could go down a bit more. I agree with that. I think the S&P is not done personally, but I would say though that if the S&P goes down, like some of the macro people I pay attention to, they've said it could go down as much as 10% more. I think then 77K is not the bottom for Bitcoin, right?
Yeah, that feels weird to me. Why is he saying that might be the inflection point where it kind of divorces compared to what we've seen over the past couple of years, where they're moving, much more in lockstep, just maybe BTC at a higher rate.
Yeah, I think the idea is Arthur Hayes has said this, and others have too, that Bitcoin usually leads the S&P because it's so sensitive, and in the past it does bottom earlier than the S&P, which is a bit slower. But still, I think it would be reactive to the S&P going down. But
Yeah,
I
I would second that. Um, I think also if you look at whatever the technical analysis for Bitcoin, that level, whatever 75, 80 is kind of it's like a 200-day moving average sort of bottom of the trend there right now. If it does drop below that, you could see a significant further move down, right? On the other hand, right, if you say, okay, that is the bottom, then it's a classic situation where the price could go. I'm predicting the price is either going to go down a lot or up a lot.
You should start a newsletter, a paid newsletter. That sounds sounds. But
yeah.
I mean, I think, I do think though that the interest in Bitcoin, I mean, it does feel like if it goes down to 77, or let's say it goes down to 70, I just think it'll just be bought up. I feel like there are so many people,
Yeah. Well,
institutional
also,
investors.
yeah, exactly. Also, this kind of reminds me of sort of the last bear market when everyone was convinced that Bitcoin and Ethereum would drop significantly more than they did. And the max pain was that it didn't. And people ended up
me.
like,
I did that.
Yeah, exactly. People ended up getting offside and having to buy in much later. So I think now the consensus is actually that it's going to drop more because there's such great macro uncertainty. People have seen that Bitcoin reacts more than the stock market, reacts to a higher degree than the stock market. So people are expecting another 5-10% move down in the stock market. Why wouldn't Bitcoin drop another 20-25%? So that's what everyone's expecting. And yeah, it's max. So they're waiting, right? And so you could easily see it rip up high, and then people have to buy it at a higher level than they were hoping.
This was like a really weird correction for me where it went down like 30%, but the feeling for me is like nobody cared. Like nobody thought it was that significant of a move. Like in a compared to like past cycles, you would like be hearing about this massive correction. Maybe because the run up was like so early, but I didn't get nearly as much of a panic feel this time around from the 30% correction. And exactly like you said, Graham, where it's like, no, it's probably going to go down another 10% or 20%. Like 35% down is like pretty big.
Yeah.
Yeah. It's kind of normal though for bull cycles. Like a 30% drawdown is like Bitcoin is not unheard of. Graham, I just put this tweet near the top from Lynn Alden. This is one of the reasons that traditional markets have gone down in the U.S., like the stock market, S&P, NASDAQ. And basically you're getting like this kind of withdrawal of funds from the U.S., and then they're going to their local markets in Europe and Korea, Japan, Hong Kong. They've all done well, while the U.S. markets have gone down. And so then there's this kind of whole thing that I've heard for the past 2 weeks about like the great rotation, out of the U.S. We're going to have major growth in these other countries because they've been kind of down or flat for so long, and the U.S. is overcooked. There's a lot of uncertainty, and I think Lynn Alden had this great graph that really puts it into perspective for everybody. And it basically it's like a classic crypto graph too, right? Where you have some shit coin that goes down 90% for 2 years and then gets like a 10% pump, and everyone's like, yo, I'm rich, this is great, right? And it's the same kind of thing, right? You have the rest of the world share of whatever growth, and it's just going down and down and down and down. And then the past month or so, you just have this tiny little nub, and then that's what everybody's kind of getting up in arms about, or saying that the American stock markets or the American markets are done. So just a little perspective, right?
Yeah.
And
I like that.
And importantly, if this reverses, right, like, which I think there's a pretty decent chance that it will reverse. People, they've been scared out of the U.S. and there's been, uncertainty and this, that, and the other. But now that markets are down 10% and the Mag 7 have been hit the hardest of that, and you start to see, let's say it goes down 10% more, I can't imagine that the money will stay in their local backwoods markets. I just think it would come in and they would want to buy Nvidia or this, that, and the other. So
On the European markets, backwood markets. So hot take.
Yes, they are. They're totally backwoods markets. They're ridiculous. And for the European markets, I think the biggest reason that this money has come in is the Europeans have promised to start spending money on defense, right? They're apparently going to borrow a lot of money to do that. We'll see if they actually go through with it. And which country in the world has the biggest what's it called, defense industry? It's the U.S., right? Like, who's going to have the biggest windfall from that? I think it'll be the U.S. These countries are going to be buying a lot of U.S. defense stuff.
Just to push back a little bit, because as people have rotated, or there's this talk of this rotation into non-U.S. markets, right? And you hear people talking about the equities that are the way equities are valued in some of these markets. They're like whatever it is, 8 to 10 times, 15 times earnings, like at most. While in the US, it's like standard for like 30 times earnings, right? So that's, I think, part of the argument that people are saying, okay, well, look, there are actually good stocks in some of these other markets and they're undervalued. So why not move to them?
That's very true. But Graham, you got to look at it like you do a shitcoin casino. How much money can you put into some local stock, right? Can a sovereign wealth fund put in 1%, right? Like $1 billion, $2 billion, $10 billion. These markets are illiquid as hell, and so they can't really shove too much in there. One of the reasons, there's a bunch of reasons why the U.S. markets are preferred. One is because they're so liquid that you can get in and out and not lose your face on slippage and all this kind of stuff. Number two, the dollar has been going down. That's true, but what if we move past some of this pain in the U.S. that we're experiencing right now, which the Trump admin and Besant has stated explicitly they're doing on purpose because of the kind of terrible policies that Biden put in place. So it is going to be painful for maybe from a fiscal perspective for the next year or so or whatever. But what if the dollar stabilizes and or strengthens? I don't think it'll strengthen that much, but what if it stabilizes? Local currencies, let's say you're Japan and you start printing money, or China, you start printing money, or Europe, you're going to be printing a lot of money. That's not going to make their currency kind of stronger, right? And then they'll be in stocks in their local regions with a depreciating currency. That just doesn't sound good to me.
Yeah. When I hear that scenario, I start thinking, okay, well, that's a perfect excuse for money printing to start happening in the US, because they don't want the dollar to be too strong. These other countries are going to start doing their stimulants, and their currencies are going to start weakening against the US dollar. That'll be the perfect excuse for printing in the US to lower the dollar again.
Yeah, I mean,
relative
and
to the
this is
other
part
currencies.
of this so-called Mar-a-Lago Accord that's been kind of been cooking around for a while, and I think everyone needs to kind of pay attention to this pretty closely to see if and when it happens. It's kind of it makes sense because I mean a lot of other macro people like I recommend Jim Bianco. I listened to him on this past week, and I think he's got it nailed down, honestly. And it really kind of benefits all the different parties involved, right? Um, because it pretty much solves kind of big issues with each of these different countries. And so it would really help the U.S. obviously to have the dollar kind
So
of weakened.
his view again, Jim Bianco's view is basically that there's going to be a new deal, a new monetary deal, and the U.S. is basically going to effectively default, and all the other countries are just going to have to be like, yeah, we're gonna buy we're going to buy treasuries at like zero interest rate, 100-year bonds or whatever. That's his theory, right?
No, I
Something
mean
like that.
that's one part of it, right? It's a more complicated thing because so for example, China would be a major player in this, and China's kind of really in a worse situation than the U.S. is right now. I personally think that they're pegged to the dollar, right? And they can't really print money because it would put way too much stress on their currency, and it's already under stress as it is. But then their economy is just in shambles, and it doesn't really look like it's going to get better, right? Like Michael Pettis is a guy I would recommend following on Twitter,
Yeah.
who goes into this a lot.
And why
And
is
so
their economy doing poorly? Is just lack of people now to export to, or yeah.
yeah, so they basically took. I mean, this is a long discussion by itself, but like for the past 30-40 years, they basically they took money from people and they invested it into manufacturing and infrastructure, right? And that works. That works while you get like positive improvements in GDP, right? The first bridge you build across a river that improves efficiency and a lot, right? Now we have a faster way across this river. Wow, productivity goes up a lot. The 100th bridge you build over the same river, you don't get any efficiency gains right from that, right? And so same for like manufacturing. The first 10 steel manufacturers you build, you get these massive productivity gains. But then you keep doing that and you keep doing that, productivity goes down over time. What happens though is that internal consumption is absolutely smashed. And so right now in China, you have a situation where consumers or people don't consume, right? And China has all this manufacturing capacity, but they cannot. The people within the country cannot support that capacity, and so they have to export it.
This was like the shocking thing coming back to the US on like how much people actually consume compared to like in Japan or things like that. It's like everybody has like 2, 3 cars, a house that needs constant maintenance, like all these things that you need all the appliances.
Vacation home, a boat.
Vacation home, boats, doing all these traveling. It's like coming back from like Japan, it's like man, the level of consumption is just like insane. That's also probably goes into a lot of your points, Dave, of like this is the only like true consumer economy in the world. This is like the US. If the US isn't buying, like I don't know what every other country's gonna do because no one's buying.
It's kind of like I love Michael Pettis because he really puts it simply for people like myself, but it's really bad for both parties, right? Because it's not a one-way street. It has to be a balance, right? It's just like a ledger. If one side is consuming too much, that must mean the other side is not consuming enough, right? It just has to be. And so what you have is this really kind of broken system right now where and China's actually, again, you can go into this. I wrote about it last week actually. China's strategy apparently in Chinese no, Michael Pettis calls this a beggar thy neighbor strategy. It's basically they're trying to kind of, and they've done it with America, where the American manufacturing basically goes to China. China is able to export its unemployment rate, right? So like all the unemployment that would happen in China gets exported to the U.S. because the manufacturing capacity is now in China, right? So the U.S. has all this, and they export it to other countries. The manufacturing in America shuts down, meaning that we're more reliant on China for this. Over time, what this does, though, is it lowers the ability for America and other countries, like Spain, for example. There was a good example of Spain. It lowers the ability of those countries to produce, basically like make things and have more money. And then they can't pay for the Chinese stuff. And then what is China going to do when they've basically bankrupted all the people that they've taken the manufacturing from? No one's going to buy it. People in China can't buy it.
Normally, are under like a ideal free market situation, this would naturally balance itself and correct itself.
So this is the important thing, and I tweeted about this last week, or a couple of weeks ago. This idea of a free market, it really doesn't exist.
Well, that's what I'm saying.
So because China has a policy where a very explicit policy where the government is taking money from people, right? They're taking taxes from people, and then they're not using it to like for services and infrastructure for people like health insurance and all these kinds of social programs and stuff like that. They're taking that and then they're giving it for free to specifically the manufacturing sector, right? So the manufacturing sector in China gets these massive subsidies. That is a trade policy. And America has this, free trade. We're all about free trade. You are effectively letting China dictate your trade policy because China now has, it's not a direct tariff, but they're basically creating like a negative tariff, and so if you don't have a trade policy, or your policy is like whatever, laissez-faire, whatever, do whatever, then China dictates it.
Yeah,
China dictates American trade policy.
So all of this seems very bullish China from my perspective, right? Like they are, with their policy, they're able to create this dynamic manufacturing industry, and you see it now. Like Chinese EVs are dominating. Like they're way better than everything else in the world.
Well, I guess the question is, which one's harder to reproduce? Is it harder to generate consumer demand, or is it harder to rebuild manufacturing? I would say probably the argument is that rebuilding the manufacturing is actually easier.
Really?
Compared
that seems harder to me.
I don't know.
I think both are hard. I think probably, Andrei, creating consumer demand is harder because at least it looks like for the Chinese government. And again, I highly recommend Michael Pettis on X. I read everything he writes. But you kind of they are not pivoting at all, and they're kind of going the same route over and over again in terms of how to fix their economy. And it's just in the long run, it's not going to work. And what you're seeing, Graham, is right now, all these major developed countries are doing some form of onshoring, reshoring, friendshoring. This is going to directly hit China, right? And it's gonna take who's gonna buy their stuff, right? Because and then the Chinese can't. They don't have the capacity to. So it's really hard for them. And they need to do like major. Yeah, go ahead.
I was like extrapolating this out where it's like, okay, now let's assume this like whole reciprocal tariff thing goes into effect, and now there is no more free trade, I guess, in the world. It's all like reciprocally tariff based. I guess what does the world economy look like, and how does that affect BTC or U.S. equities?
I mean, I think this, yeah, how would that affect? I mean, I think U.S. equities will be fine. It would be my guess. And for crypto, I'd have to think about that in terms of because China's right now, they're not really pro crypto, right? They're
I think they
kind
have
of
the
like a
same amount of reserves as the U.S. roughly. I don't think they're pro.
no. I got into an argument, not an argument, a discussion with Jamie, our head news writer at Bitcoin.com news, and this topic came up. How big are China's reserves? And he was like adamant, and I would trust him over pretty much anyone on like this. He's like, China has a tiny amount of reserves, almost zero. It's fake news. It's all not true.
Yeah,
they don't have
saw
anything.
Stories this week which were showing that whatever reserves, because there's a number reported that the Chinese Bitcoin reserves are similar in size to the U.S. ones, but I've seen increasing rumors that it's long since been sold.
Yeah,
they don't actually hold that. And we should also say, by the way, of course, that the U.S., the reported number, like 17 billion of Bitcoin reserves in the U.S., they have less than half of that, because half of that is reserved for Bitfinex restitution.
So here's how I view it potentially on all this stuff. This is like the ultra bull case for BTC in this situation, right? So everything gets reshored, everything is reciprocally tariffed. So now the primary income taxes actually get reduced from this, right? Because the one way to increase consumer demand is you have to reduce income taxes, push that into like some sort of sales tax or tariff, and there's going to be a large amount of people that aren't consuming. They're going to be buying assets with any savings that they've generated. And that could potentially be like a global phenomenon where we even saw with like the stimulus checks where it was like, what, $3,000, 5,000, I think it was 3,000 twice. And that went to like huge surges in the markets. Now you imagine, okay, can we cut off income taxes by like 10% or something like that through all of this repatriation? Man, that'd be massive.
Not only that, but I think more broadly speaking, Bitcoin thrives in an environment where there is not so much cooperation. There's less cooperation between nations. In this tit for tat, reciprocal tariffs environment, that's the type of environment that a permissionless money is more likely to thrive.
It's the perfect global currency. If you can't, send dollars or yen through the banking system, what do you send? BTC.
Yeah,
or stable coins.
All right, I want to bring up. I think this is a good transition time here to discuss Elon's magic money computers. So let me see if I can play this clip from Ted Cruz interviewing Elon Musk.
Well, so tell us about it, because I never heard of that until you brought that up.
Okay, so you may think that the government computers like all talk to each other, they synchronize, they add up what funds are going somewhere, and it's it's coherent. There's and that the numbers, for example, that you're presented as a senator, are actually the real numbers.
One would think.
One would think. They're not.
Yeah.
Okay. I mean, they're not totally wrong, but they're probably off by 5% or 10% in some cases. So I call it magic money computer, any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. Some are, but there's some at HHS, some there's one or two at state, there's some at DoD. I think we found now 14 magic money computers. Where
14, okay.
They just send money out of nothing.
Okay, so Elon's hair is looking great, by the way. But just to sum up, I think what he's saying there is there are these computers in the various levels of the U.S. government structure, and somehow these computers are able to just like receive invoices and pay them, but the payment isn't attached to a bank account balance on the other side. In other words, the money just materializes from these computers. Does that sound like an accurate summary of what he's describing?
Yeah, I mean, it sounds like that's what he's saying. I would want to like, because I haven't gotten into the details of this, but I would want to like read what some of these really, really wonky accounts on Twitter are saying, like, you know, Conk or whatever that person is, and maybe Fed guy, because they might know a little more or have a more nuanced view of how this is happening.
Yeah, I kind of view it like potentially as like a reconciliation problem where it's like, okay, let's say there's like $1,000. This is like the classic double spend problem that blockchain is supposed to solve, right? Where somebody sends an invoice, there's like $10,000, and then I pay $1,000, and then somebody else pays $1,000, but the computers haven't talked to each other yet. So like I think there's still $9,000 in the account, even though, and the other guy thinks there's $9,000, but there's actually only $8,000. And then like at some point, you know, there has to be some reconciliation where it's like, okay, actually there were $8,000. But like that's a very simple scale, but I imagine it's like on a massive scale, right? Because if they're just processing so many payments, how does anybody know how much money is actually in there, who sent what, when are these like reconciliations happening? And that's why that like 5 or 10% number like starts to make sense to me, where it's just like these computers don't sync up because they're running on like 80-year-old code or whatever, like, and through this like bureaucracy meat grinder, and like how much money is there at any given time? Nobody knows, right? Like that's what it sounds like to me, I guess.
Yeah. So I was going to ask, like, you know, when people see this interview and try like magic internet, magic computers that are printing money, like, does this make people lose faith in the system, like, and just see that, okay, this is an emperor has no clothes moments, like the core illusion of modern money has just dissolved away? I was going to ask that question, but then I also started thinking, like, at the same time, it seems, I don't know what's going on here in the zeitgeist, but it does seem like everyone hates Trump. Everyone hates Musk these days. Nobody believes what he's saying. People are burning his cars. Like, when normal people see clips like this, are they just thinking like, what the hell is this guy on? This is more Musk conspiracy. Like, get this. What's this guy doing in my government? Get this guy out of my government. I
would say, first of all, I don't think everyone hates Musk. I think it's probably partisan as hell. I think if you found out if who they voted for last election, you'll know with like 90% accuracy how they feel about Musk, right?
Yeah, same with how they feel about inflation, right?
Exactly, right? I was just about to say, like, even like yeah. There was some very depressing statistics last week, right? Like where the
number one predicting factor for how you think inflation is what inflation is doing is how you voted in the previous election. That's
and how the economy is doing.
Yeah.
Like, just like, do you think the economy is doing well?
Your confidence in the economy is primarily dictated by how you voted. So if you voted for Trump, you think the economy is doing well. If you voted for Biden, you think the economy is doing badly and inflation is out of control.
And you hate Musk.
Yeah.
And so I think those people would probably see this clip and they would be like, this guy's insane. And this is not how our monetary system works. But I think, when I don't know if you guys went on this journey, but I definitely did. When you first started wrestling with like, what is Bitcoin? What is this magic internet money? How does this work? How does this have value? You kind of get to these same kind of questions, and then So and then when I talk to other people, and Graham, you and I talked about this a lot because we were working on trying to reach out to normal people and teach them what Bitcoin is and why it has value. It's a normal reaction to just the concept of money when you start to drill down to it, to being like, this doesn't have any value. This is ridiculous. So this clip doesn't, like, even if it is true, even if it's 100% true, it's not that far from what like money actually is anyway. So, I don't know.
Okay, well, so for someone who has dug into it, gone down the Bitcoin rabbit hole, this is sort of like kind of quirky, not surprising thing. But maybe the argument is that, okay, Elon Musk, most famous person in the world next to Trump, perhaps, he's talking about this. This might trigger a new wave of people questioning the system. And when you question the system, where does that lead? For us, it leads to things like Bitcoin. That's the solution, right?
The zeitgeist is actually the opposite of that. It's like you got the Trump side partisan of like, we have to destroy the current system. And like the Democrat side is more like, we have to keep the system going. So anything that's saying like the system is broken, there's like a reaction of like, no, the system is fine. The system is fine. And that seems to be like the competing zeitgeist, I guess, right now. I don't know. What's your guys' take on that?
Yeah, I mean, I agree. I pointed out this story in my newsletter. It's U.S. lawmakers urge Trump to drop crypto before it hurts America, right? And this is like a popular story from last week, right? And to me, this is so sad because I would say crypto is almost even more partisan now than it was a year ago, And so the thing that we just talked about, if you ask, probably don't even have to ask anybody. You just find out who they voted for, and then if they like crypto or they don't like crypto, right? Because I imagine anyone who voted for Harris is going to be like, I hate crypto. It's a grift. Look at Trump, Trump coin. Bitcoin now is BS. I mean, that to me is like a very sad and I think a bad thing. And I'm hoping though that if crypto returns to America and like businesses return to America, crypto businesses return to America, we can hopefully get past this in 4 years where it's not a partisan issue. But right now, I feel like it absolutely is.
Yeah, and on that note, I think obviously the regulatory winds are shifting, and this is evidenced by the latest story, which David, you've highlighted here for us, the SEC to drop the lawsuit against Ripple, and that's confirmed by CEO Brad Garlinghouse. And I think you noted that what this means is it's much more likely now that we're going to see an XRP ETF.
Yeah, this year. And then, so that was on Wednesday. This story came out, I think, at DAS, the Digital Asset Summit on Wednesday or Tuesday. Anyway, yesterday or today, it was announced that there's going to be the first ever regulated XRP futures in the US. And for those who paid attention to the kind of path for spot Bitcoin ETFs, it had to start with a regulated futures product first, right? And the SEC was like, we want to see a futures product so we can get some information and da 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 da, and then that led to the path for spot Bitcoin ETF. And so, it looks like, I mean, now after this information, holy moly, it's gonna when is the XRP ETF going to come out? Like next week? I mean, it just seems almost inevitable at this point, right?
Yeah, I'm just bringing up the XRP chart.
Do we see any activity in like the reverse direction in terms of like tokenized assets or anything like that? I know that was always kind of like a dream with the RWAs, and now you're seeing like a lot of penetration on the crypto side into the traditional markets. But like, you know, when are you going to start being able to trade your Tesla stock on chain? I don't know if that's made any like regulatory headway because that seems like a natural fit for blockchain.
Yeah, I mean, I think Graham and you and I talked about this Monday. BlackRock's BUIDL Fund. It really that's kind of the direction that they're going in, right? Is doing that, and I think it wouldn't be surprising this year if like Coinbase, or maybe next year. I don't know how fast they can move. But Coinbase and BlackRock, I imagine these kinds of major companies in the space, like in between finance and crypto, they must be scrambling to get traditional financial instruments on chain so that we can easily buy and sell it. And I have to imagine that they're absolutely jockeying to be first or to get out in front of the public as fast as they can. Probably Robinhood is in it too.
Yeah.
Coinbase, Robinhood, BlackRock. Because man, I have to tell you, the second that it's available, I'm going to be on that 100%. I'm absolutely going to be buying stocks that way.
BUIDL Fund just reached $1 billion in assets under management, and this is tokenized treasuries, and it's only available to institutions at the moment. So, David, you're not an institution yet.
But imagine like what I think is going to happen is I think Coinbase will probably be the first one, and you'll be able to buy. They'll probably roll it out with like a select number of stocks, but you'll be able to buy tokenized stocks through your Coinbase account, you know, and then they'll probably try to roll it out to people who have been maybe KYC'd on Base, something like that. That's kind of the path I see it happening. And I'm on Base. I have a Coinbase account, so I would absolutely buy tokenized stocks.
We're on realworldassets.xyz, rwa.xyz, and private credit is still the biggest component of this, followed by U.S. Treasury debt. But as you can see, it's ramped up significantly. We're starting to go parabolic here, and you know, at $20 billion in total RWA on-chain assets, it's still just, you know, it's a tiny, right? So you could see this chart 5 years from now, and you could look back to this era here as like you won't even see it on the chart.
Yeah, and
things actually
Graham,
ramp up.
I would bet a decent amount that this is the start of like just a massive parabolic rise, because all these TradFi institutions now have kind of clear rules of the road, and they're going to be getting into this. It's such a lucrative market. Everybody's looking at Tether, right?
Yeah.
What is it like? They have like 100 employees or something. They made 15 billion in net profits.
Is this finally bullish Ether? Is this because are these RWAs going to live on Ethereum, and the institutions are going to be like, we're going to need gas?
I'll actually go with yes. I mean, I feel like ETH, or like the ETH ecosystem, is much more likely to get this slice of the pie compared to Solana. That's my take.
Yeah.
David, you're chuckling.
Well, no. I mean, I agree with you. I think like traditional financial institutions like BlackRock, they would look at Solana versus ETH, and they'd be like, no, we don't care too much about the speed and like low fee transaction costs. We want the one that is more bulletproof. So I think that'll happen for the. But is it bullish Ether the asset?
Yeah, that's a separate question, because
I don't think
so. it's you need the monetary premium for ETH, the asset, to have value, and it remains to be seen whether that will exist in this world. If you don't if you're trading RWAs via your institution, you don't even know you're using Ethereum, so you don't need to hold it as gas, the gas thing, and especially with the way Ethereum has structured things with their blobs or whatever, they're just like, you don't need gas. You don't need much gas to get anything done. What's the point of
I have two bullish pieces of information that I got this past week on Ether. Now, again, I haven't done anything with this because I don't know, I've been abused so much by it. But number one, this is a funny one. Kobe, the famous crypto account, Kobe.
Oh, he's ready to get hurt.
Yeah, he said he's ready to get hurt. And in the comments, the first comment that I saw was like, it's like, are you dating somebody new, or are you taking a position in Ether? And he said, LOL, it's actually one of those two things.
Yeah.
And I would put money on the ETH thing. So I mean, that to me is pretty bullish. To be honest, like, all jokes aside, Kobe maybe taking a position in ETH is he's a legendary trader. Okay. The number two thing though is I got convinced by another podcast this week. I think it was who's that ETF analyst, Seifert?
Okay.
Yeah, he was talking about how it's what's it called? Yield on your spot Ether in an ETF is coming, right? So right now there's no yield. There's no yield.
And the question is whether that yield will actually trigger institutions to care.
Yeah, and
right?
he said absolutely. And he rattled off like a bunch of other ETFs that have yield, and he's like, for major boring stodgy institutions, they look at a 4% yield and it makes them really happy, and so they'll pile into that stuff. That kind
even
of
if
they love that
underlying asset that you're holding, is extremely volatile. Like, I mean, obviously 4% yield on a stable asset like treasuries, like, that makes sense. Are these institutions really that dumb? I don't buy it.
No, but they're not. Well, Graham, they're not going to
so
take
there's some kind of hedge.
Well, no, they're not going to take like a major position in it, right? They'll take like, I don't know, 0.05% or whatever. But we were talking about like a lot of money, and so yeah, it's
you're
probably
not buying it for the yield. You're buying it for the asset appreciation potential
and the yield both.
That's retail think.
No way, dude. This is as an ETF guy saying like these people are piling into US dollar ETFs that give like 4% yield.
Yeah,
there's no
what the underlying asset is a stable is a currency, isn't it?
Yeah. It's a currency.
So, but you're just getting 4% yield. You're not getting any risk.
The currency's been going down, so it doesn't mean that anyway. But again, 1 second. Oh, allergies. Yeah. So I don't know.
All right. Let's finish off today with one last fun topic. And you know what it is, folks. The Solana ad. We're going to bring it up here. Thank goodness, David, that you were able to capture this and share it, because
that's right.
It was deleted. So let's see if we can play this here.
Show the first image first, though. Right?
Okay.
So this is in 2020.
We at Solana don't want to remain silent. We want to be clear. We believe in equality, justice for all, regardless of race or gender, and that hashtag Black Lives Matter. We stand in solidarity with everyone fighting for justice. Our goal is to take sustained, focused action. So we started with an internal donation pool for Black Lives Matter, MinnesotaFreedomFund.com. Okay, that was 2020. Fast forward to last week.
Monday.
So, America, what's going on? Well, lately, I've been having thoughts again.
What thoughts?
About innovation. You know, multiplanetary travel, nuclear energy, crypto, AI. You know, things that push the limits of human potential.
What you're experiencing is called rational thinking syndrome. Why don't we take this energy and channel it into something more productive, like coming up with a new gender?
But that's not going to stop me thinking about innovating and doing something.
Innovating, doing, these are action words, verbs. Why don't we focus on pronouns?
That's not going to help.
I sense some cynicism. Have you been betrayed in the past?
You know, I used to think the media was my friend. Can I even trust them anymore?
Of course.
Of course they'd say that. That's a biased take. I got canceled for saying 2 + 2 is 4.
Have you ever considered that math is a spectrum?
What?
America. Numbers are non-binary. We've been conditioned to believe that 2 + 2 is 4. It's a societal construct.
It's literally math.
Or is it a dominant narrative? Have you been practicing the state-prescribed regulations we talked about?
Yeah. I've debanked some crypto founders and I've slowed down nuclear reactor approvals. And depending on my state of mind, I change the SEC guidelines, but I don't like it.
If we don't regulate, how will we create jobs for people who work hard to make businesses slow?
You know what? Hard work, innovation, rational thinking, it's in my blood. It's who I am. Railroads, factories, automobiles. I built the future once, and I won't be left behind now. I will lead the world in permissionless tech, build on chain, and reclaim my place as the beacon of innovation. I want to invent technologies, not genders.
Lovely. So glad you were able to get some of that negative emotion out. Sounds like we'll need a few more sessions. When can I see you next?
You're fired.
All right, goosebumps, obviously all around for everyone.
I want to say this though, like, so I also, we create a lot of media here too, and I don't want to be too hard on them because, it's a bad ad, and
it's surprisingly easy to make to get caught in your bubble when you're making media, and
especially though as a like a consultant firm ad, but like in the reverse direction where it's like we need an ad that's really playing into the zeitgeist, and then they hire like somebody for $1 million to come up with an ad. And it's like this is just like so cringe.
Like this. What if they had done this 2 years ago? This ad.
Maybe. Yeah, it's probably because it's so late. But there's something about it though that I call it like boomer speak. It's like that meme with the guy with the skateboard. He's like, "Hello, fellow young people," right? It doesn't quite. Yeah, I think maybe Andrei's right. Like they hired like a slick consulting firm who's like, "Okay, we're going to be anti-woke."
Yeah.
What do all the chuds on Twitter say?
Notepad things up on the let's brainstorm. Yeah.
Oh, numbers, non-binary. That's a good one. You're like, oh, Jesus Christ. Yeah. Fuck. I mean, so, but again, I just want to say though, like, we've been trying to branch out and do more media stuff, and kind of hopefully we'll never have anything like that. That's like, I would say this cringe, but there's going to be a lot of cringe.
I mean, just earlier this week, we almost put out like a cover image on a thumbnail for a video with the CEO of Bitcoin.com behind bars. That one didn't make it through. So.
Yeah. So my hat's off.
I didn't see that.
My heart goes out to Solana. I know it probably is a little rough, but you know what this reminds me of too is, do you remember that Binance thing where they changed the logo and it looked like a swastika?
Yeah.
That lasted
No,
like
that
a
was
couple
good.
hours too.
Yeah. Those were good times.
But I also wonder, like, they must have done like a complete turnover in the marketing department, or do you think that their marketing department is like solely just focus on the zeitgeist and do that, or it's just like a complete new group of people? Because you don't go from 2020 Black Lives Matter to 2024 anti-woke.
Or
I mean,
or there's just no continuity. Like they've just got like a couple of people there, and they're just outsourcing here. Yeah, I mean,
Someone in the chat is saying, "Do you remember the FTX ads with Tom Brady?"
yeah.
Oh my god.
Or the Larry David ones.
Oh, dude, the
Those are
Larry
actually pretty
David
good,
one.
though.
No,
I
it was
enjoyed those.
good, except
Yeah.
once you put it into context with this like completely failing company that was about to rug the entire industry.
Yeah.
Oh man. Also the crypto.com one. That's parroted so much. What is it?
Yes.
The fortune favors the brave, bold, whatever it is.
Yeah. I heard some take this week that said that basically these types of retail focused ads in the crypto industry are just completely useless. That like there's no point in doing it. You're like it's a waste of money.
I mean, that's the other thing. What's the message of this ad? Who is the target? It's just a bizarre kind of like.
Yeah.
all the devs are now just like, great, there's a chain that I can work on.
Yeah.
Graham, could you pull up one last thing? This is Anatoly had a comment. I just put it below that. He made a comment about the Solana ad. And if you just read this, because I found it to be a little confusing, I guess. And I'd just like to hear your guys' thoughts on this.
Toly says, and Toly, by the way, is one of the co-founder of Solana Labs.
Yeah.
The ad was bad, he says, and it is still gnawing at my soul. I am ashamed I downplayed it instead of just calling it what it is, mean and punching down on a marginalized group. I'm grateful for the ecosystem devs and artists that immediately called it what it is, both publicly and privately. You are the only silver lining to this whole mess. I'll do whatever I can to make sure Solana Foundation stays focused on its mission of decentralization, open source software development, and out of culture wars. So that's his take, and you want to know what we think of it.
Yeah, before I get my opinion. Yeah, what did you guys think of this? This came out today.
Play both sides here, kind of like who's the marginalized group here? He's trying to play both sides. Yeah. And who's the marginalized group? White women? Yes.
Yeah, it strikes me as bizarre that that's what he's worried about, the marginalized group, that the people feel offended by this ad.
There was a huge backlash.
Really? Okay.
From like Solana NFT. I mean, you can imagine, right? Like,
okay. All right. So, I mean, that's what makes sense. But for me, like, what I care about it more actually is the other side of people, like the people who are not in that marginalized group. Now, like, they just see it's so cringe. Like, that's the real damage that's caused here. That's how I see it.
Yeah, I when I first started reading it, the first sentence, I thought, oh, he's mocking everybody, because the language is so strong. I thought it was sarcasm, gnawing at my soul. I was like, anyway, I mean,
now.
And also, I just like to say, what's wrong with punching down? That's the best time to punch. You punch when they're down. Punch down, man.
All right. I think that's a good spot to end it.
Oh, no.
David Sensol, you punch when you're down. Punch him when you're down, David Sensol.
I mean, come on. That's when you have leverage, right? Didn't Star Wars teach us anything? I have the high ground. Punch down.
Yeah, that was the lesson for sure from Star Wars. All right, guys, that was good. It was a fun one. Thank you so much. I enjoyed it. And thanks to anyone who listened to us and commented. And yeah, we'll see you next week on Token Narratives. Adios.